Hi, welcome to the Market Alert for Monday, the 7th of November 2022. So let's have a look at Friday. Powell payrolls and positioning spark chaotic week across markets. Rug pulled was the subhead. Historic dollar selling as China reopens gains traction. Mixed NFP and afterthought. We're going to look at that now in more detail. Okay, before we look at the markets, let's have a look at these NFP numbers. They say mixed. Well, actually, there was a sleight of hand going on. Quite spectacular, actually. Let's just have a look. So we've got, these were the official numbers. We've got 261,197, but this one was adjusted. The original number, if you look back to Friday's video, was actually 263, which you can see there, 263. And then in here on Friday, they adjusted it to 315. Now, I said on Friday, if the number came out anywhere near the 263, which it did at 261, then the market would move lower. And it did. However, as soon as they released the adjusted figure, it made this figure, the actual figure, look a lot lower. And so the market was then able to move to the upside, which is exactly what we saw. So let's move on and have a look at the market's reaction to this. There's no stopping this market going up at the moment. We've got the midterms tomorrow, which we should look at the moment. Let me just refresh this. And let's have a look, see what we've got this week. All clocks are normal, as it were. Everybody's taking care of the daylight savings now and British summertime for the UK. So today, what have we got? ECB, we got Lagarde again. She's been out every morning so far for the last 3 days. 8:40 p.m. 8:40 p.m. That's an interesting one. Mester is going to speak. Oh, that's the only news that we've got today, I was going to say. This is not just one day, is it? This is the week. So that's it. That's your lot for today. So there's nothing to stop the market from going up. Tomorrow, midterm elections. They're going to be interesting because the Democrats are losing at the moment and they're already crying foul saying it's going to be rigged. I'm not getting into that. It makes my blood boil. Thursday, we've got Waller speaking. CPI for the US on Friday. So that's going to be interesting. What have we got? A drop in the interest rates. Well, sorry, not in the CPI numbers. If that happens, the market goes up. Core CPI, again, forecast a drop. Market will go up. Unemployment claims, FOMC, Mester and George speaks. So we've not got any main characters this week either, apart from Lagarde today. Got GDP for the UK on Friday morning, and then that's about it, isn't it? We've got the French bank holiday, EU economic forecasts, US is a bank holiday. And we've got the prelim on Friday as well. So a bit of a messy week, but there's absolutely nothing there, even with the CPI numbers, because no doubt they'll make an adjustment like they did before. So CPI is probably the biggest one this week, but don't be surprised if that comes out lower, and that'll just send the market higher because it will then indicate that what Powell's been doing is fine and inflation's going to come down, despite the fact that inflation's higher than the interest rates, which never generally works, but there you go. The gold-silver ratio dropping down because silver moved up 7% on Friday. So let's take a look at the Dow, see what happened during Friday, and the DAX, and along with the S&P and the FTSE 100 as well. So in the FTSE, you can see that Friday the market was up. It's banging its head against the 200 MA in the daily chart, and that 200 MA also has the 62% retracement. Price is up, as I say, on the overnight, but this is the carnage from Friday. Let's just show you what happened here. In this one bar alone, the market dropped. There was a 500-point swing, so it's obviously dropped 250 and then come all the way back in no time at all. And then for the remainder of the session, we see the Dow move up to the high. There we had a 757-point swing in this market before it actually came back down, but then they decided to bring the market back, and at the moment it's banging its head against the 200 MA where it did during Friday's session as well. So an interesting pattern going on there, because that 200 MA certainly put some resistance into this area, but we are above the DP at the moment. We're above the 50, we're above the 20, and we're above the close as well. We just need to break through here, and then we can attack Friday's high, which is the likely scenario, given the fact that there is no major economic news, and geopolitically nothing's happening either. So that's what you can see in the charts at the moment. There isn't any reason for the market to fall out of bed. It had its chance last week, didn't it? Let's face it, we had the rate rise and we had the non-farm payrolls, and the market's still going up. So trying to go short is going to be a tough one. In the DAX, well, there's a move and a half, which you can see there. What was the total range for Friday on the DAX? 178 low to high, which is odd actually, because it looks a lot more than that. So let me just redo that. Yeah, it's 178, and it looks like a 300 or 400 point move, but it's not. It's just under 200 points. And overnight also moving to the upside there, which you can see. We've got resistance to the left at this price. Let's just grab an extension there and run it across. So at 13,500. Wow. Yes, so 13,571, and you've got the 200 MA in the way there. So keep an eye on this level, very important level, and that 200 MA if we do break through. In the 30 minutes German DAX, you can see there straight up. Let me just measure this move just to make sure. So from the morning, barring the non-farm payrolls where the market pulled back, that's more like it. We see 377. I don't know why the daily chart is showing that different number. I knew it was a good 300 and odd point move. I don't know why. It's a more operator error there, I think. But that's more like it. Yeah, 377 point move in the DAX from the kickoff of the session, which you can see there. What have we got? 7 a.m. from the futures all the way up until the high there, which happened at 4 p.m. Market back down. Actually, I think it could be the difference in the trading hours, to be honest with you, which is now back to normal. And of course, reloading the charts, that's probably why. But anyway, 377 point move in the DAX, where you see the market come back and retest the 200 MA and then continue higher. And then it's just traded sideways to lower following the Dow. Got a bit of a bounce, and we've got the gap, but the gap's now being filled. All we have to do is get through the close and the high, and then we continue to the upside. Bit of weakness coming in there now. Let's just have a look at that in a bit more detail in the 5-minute chart. As you can see there, let's just pull this down so we can see where the high is. So we're 100 points off the high, and about 70 points to the DP. So we've got to hold at that 200 MA in the DAX, and move back up from there to have any attempt at going through the close and the high of Friday. Trades for last week, nothing to write home about. I didn't get to do too many as I was involved in other things. 26528, 1.99 for the profit factor, and win-loss 69.33, whatever. Never really bother about the win-loss ratio as long as the profit factor is positive. That's the main thing. Good trade on Friday. Managed to get the short in the market when it absorbed the news, and then of course the market came back later on in the evening. Total still looking good though from the 19th of January, 34,701, 2.53, and we're at 57 there, 43 for the win-loss ratio. In the S&P, you can see the market's attempting to move back up. It's looking fairly weakish, to be honest with you, for this one, which is very interesting. Trying to get back through the 38 and the 5-bar moving average there, and you've got the high of Friday's bar as well, which is going to be a struggle. So the S&P struggling a bit there. On the upside, there's the NFP numbers, came all the way back, then went back to the high, Thursday's high, and then there's Friday's high with the 200 MA, which is ties in with this in the daily chart. So the moment we're above the DP, the 20 bar, the 50 EMA were sideways and sitting on Friday's close. Meanwhile, in the FTSE 100 through the 200 MA, that's what you want to see with the Dow, the DAX and the S&P, but the FTSE has already done it. Although saying that, markets come back below it on the overnight. Let's have a look in more detail. There's your move up with the Friday and the NFP number sleight of hand that forced the market up further. There's the high from Friday. We've got the close there as well, but the market's gapped. It still hasn't filled the gap, so there's the potential to move higher back to the close to fill that gap. Sideways overnight so far. In the currencies, sitting at the 50 EMA for the GBP JPY, not too much action during Friday there. Just a 100-point swing again, and then the market moving to the upside. We filled the gap in the GBP JPY. We need to get back above the close and the high to continue on the upside. The pound also fighting back on Friday with some demand there, which you can see, trying to hold this above the 20 bar moving average. Again, the market's reaction to the NFP numbers, big swing of 120 points, down and then back up, and then back to the high that is created here, the 200 MA, just in this area for Friday. Again, the gap hasn't been filled yet, needs to fill the gap, which is going to come into contact with the close, the 200 MA and Friday's high, should it attempt to do so. And in the dollar, on Friday, straight down to 62%, 50 EMA, markets finding support there. So according to the news, the Chinese releasing people from lockdown again because they want zero COVID, and the market reacting to this, whether it was just to get the dollar down, take some pressure off, I don't know. But you can see there, the market's gapped higher, hasn't filled the gap. So watch the close and low. The market may need to come down and retest this before it's able to move back to the upside there. Spectacular day for silver on Friday, but then we saw it a couple of weeks ago, didn't we? And look what happened. And straight away overnight, the market's already putting pressure on the downside. The market trading up to bang on 89% from there to there. So under pressure to actually start heading back down if the dollar turns around and moves higher. Here's the internals of the move. It was already moving up nicely, and then the market moving higher there. At the end of the day, we had 261,000 new jobs. 263 was the previous, and the forecast of 197 was just pathetic because the market came out a lot higher, nearly 100,000 higher. So that's what we saw, the initial response moving to the downside, and then of course the market, so everything else then just moving back to the upside as it was just manipulated. Right, so we got the gap in silver as well. May need to fill this, or we'll attempt to fill it. The gaps are generally filled. We'll have to wait and see. Gold trading up to the 50 EMA and finding resistance, reversing off this, as you can see in the 30-minute chart. No gaps in the gold market. Okay, that's a quick roundup of today. What we've got coming this week, not a fat lot. Midterms are going to be very interesting, very, very interesting, and see how the market plays with that, whether the markets have just been pumped in readiness for a really bad result. Who knows? And if it is bad, it'll be turned around, no doubt, because don't forget, we're in the sort of already, it appears to be in the Santa rally for the bankers' bonuses, which we see every year. Okay, that's it for this one. If there is anything else major happening or whatever, I'll let you know, but otherwise, as ever, thanks for watching. See you in the next one.